Credit card tips for beginners. If you're new to credit cards, you might be amazed to find that you can start using your credit journey at the age of 18, the minimum age for opening up your first credit card. Understanding the fundamentals can save you time, money, and aggravation while getting you started on the path to good credit. Before moving ahead, welcome to Upstep Financial, and for this video, we'll be talking about some amazing credit card tips. But before that, make sure you subscribe to our channel and turn on that notification bell so that you'll be updated on future uploads. Your first credit card might be your first step towards establishing a strong financial future and an excellent credit score, or it can lead to a pile of debt that you fight to repay for years. Here are some pointers to consider before using your first credit card. Tip number 1, make a budget. A credit card is a convenient tool to make purchases and get rewards, but it should never be used to purchase anything you cannot afford. Having a realistic understanding of how much you can spend and pay off at the end of the month can prevent you from going crazy. Try a budget like the 50-30-20 method, which recommends spending 50% of your take-home salary on basics like housing and groceries, 30% or less on stuff you like but don't need, and 20% or more on savings and debt repayment. This will help keep your credit card spending in line with your income and other saving and spending priorities. Tip number 2, maintain a record of your purchases. The first step is to determine how much you can afford to spend. After that, be diligent in tracking your purchases throughout the month, possibly using your credit card's mobile app or website. Finally, once you've met your monthly spending limit, avoid using the card until you've paid off the balance. This discipline helps you build a good credit score and keeps you out of credit card debt. Tip number 3, configure automatic payments. It can take some time to become used to paying a bill every month. Avoid late credit card bills by setting up automatic payments ahead of the due date. Ensure the scheduled payment is greater than the minimum payment, ideally for your total balance, and that you have sufficient funds in your checking account before the payment is scheduled. You may be charged a late fee or a return payment cost if you do not comply. Paying on time is particularly important because your payment history is the most important factor in determining your credit score, which is a 3-digit figure used by lenders to analyze your credit utilization. So keep your credit score high and make it a point to pay off all your credit card bills on time. Your credit card payment will be due on the same day each month, making it simple to stay on top of your payments. Tip number 4, use as little of your credit limit as possible. It is tempting to charge up your credit limit on your credit card, but it is critical not to. Account balance, or how much your credit limit you are using, is the second most important factor determining your credit score. As a result, holding a significant credit card balance from month to month can harm your credit score. Furthermore, it can lay a foundation for incurring credit card debt, taking a long time to repay. In general, using 30% of your credit limit is better for your credit score. Tip number 5, each month, pay your bill in full. Your credit card issuer simply requires a minimum payment, which is a proportion of your outstanding balance. While this may appear easier and less expensive option than paying the full amount owed, it will cost you more money in the long run. Paying only the bare minimum adds interest to your balance each month until you pay it off completely. Because a percentage of your payment is used to accrue interest, your debt will only reduce by a tiny amount. What's the bottom line? To prevent paying extra, pay your debt in full each month. Tip number 6, check your account statement frequently. Your credit card company will send you a monthly statement outlining your transactions from the previous payment cycle. Even if you've planned your monthly payment, it is important to read your billing statement. Furthermore, you should go over your statement to look for errors or unauthorized payments. If you notice either of these, notify your credit card company right away so that they can be resolved. Most credit cards include a zero liability guarantee, which means you will not be held liable for fraudulent charges. However, if you wait too long to notify the charges, federal law may require you to pay up $50 in unauthorized charges. You can even review your transactions in real time and find issues far sooner if you open an online account or download the card's mobile app. You can even set up alerts to help you detect suspicious activity as soon as it occurs. So, guys, do you have any questions so far? Let us know in the comment section. And do not forget to leave a like and subscribe to the channel. Tip number 7, redeem credits. If you've chosen a rewards credit card as your first credit card, be sure you're familiar with the rewards program. Then optimize your cash back or points by spending them in the most rewarding categories, such as petrol or restaurants. Then don't let your rewards start piling up. You can redeem your rewards for a statement credit, a check to your bank account, travel, hotels, gift cards, and more, depending on your credit card. Some rewards, however, have an expiration date, which means you have to spend them or you lose them. So check the fine print on your credit card to see whether it has an expiration date. Tip number 8, use the additional perks. In addition to cash back or travel rewards, many credit cards provide other perks. Many credit cards, for example, include rental vehicle insurance, waived checked baggage fees, travel insurance, price protection, which provides a return if the item's price reduces after you buy it, and an extended warranty. If you have any questions concerning your credit card benefits, log into your online account and review your credit card agreement or call customer service. Tip number 9, know your fees and how to avoid them. Except for an annual charge, you can avoid most credit card costs by doing specific things first. For example, you can avoid a late fee by making your payments on time. To avoid a cash advance fee, skip the cash advance. By using a card that does not charge international transaction fees, you can avoid paying them on transactions made abroad. Tip number 10, install the mobile app. You can manage your credit card account on the go by using the mobile app for your credit card. You can access your account at any time to view your balance, check your available credit, ensure your payment was received, report a lost or stolen credit card, and more. Of course, you can do most of this using your phone's browser, but apps are generally designed to be faster and easier to use on mobile devices. Tip number 11, debt consolidation loan payback should be compared. Aside from balance transfers, you can consolidate debt with a debt consolidation loan. This is a personal loan with a low interest rate that you can use to pay off your credit cards. As a result, you pay off all your credit card debts, leaving only the loan to repay. With good credit, you can qualify for a low interest rate of roughly 5%. Ideally, you want a rate less than 10%. Check current rates online, then compare the expected costs to other options. Even if you have a loan, make the maximum payments you can afford to pay off your debt as quickly as possible. When putting together a debt management plan, keep 2 things in mind: time to pay off, total cost, which is including the interest charges. This takes some calculation, but getting the most cost-efficient and timely repayment plan is important. Tip number 12, stop charging until you've paid off what you owe. The last thing you need is extra debt to pay off while you're already in debt. Of course, that implies you must commit to not charging while you focus on debt management. You do not have to give credit cards up forever, but you should try to get back to zero first. It's the only way to get back to the point where you can use credit without paying interest. Even if you employ balance transfers or consolidation loans, resist the temptation to charge until you've paid off your debt. Otherwise, you risk accruing new liabilities and exacerbating your debt problems rather than alleviating them. Your goal was to get to zero so you can regain stability and avoid falling back. Tip number 13, train yourself. As with all new behaviors, you need to train yourself on how to best do them. Think about learning to drive or writing your first essay at school. Once you have your credit card, you can understand the mechanisms of how it works. Then you can begin using it slowly and consciously. Make small, regular monthly payments at first and get into the habit of paying these back on time. If you have a big spend, like a holiday, that you want to put on your card and pay it off over the zero interest period, then make sure that you have sufficient income over the coming months to do so. Most importantly, be confident that you can handle your cash flow and to not allow yourself to get stuck in debt that you can't pay back. Acquiring a credit card is now needed. It allows you to buy the goods you need even when you do not have the money right now. It also contributes to a brighter financial future. Avoid a pile of debt. Instead, pay your bills on time. Follow the beginner's guide to using your first credit card correctly. I hope you now understand how to maintain your credit card. Please leave us a like and share this video with your friends. Also, don't forget to subscribe to this channel and turn on that notification bell so you are updated for future uploads. Once again, this is an Upstep Financial, and that is all for today. Thanks for watching. See you next time.